What is up, guys? It's your boy, No Risk, No Premium, back with another episode of the 2 Minute Drill, guys. Today was a little bit more of a definition of the OPEX fuckery that we can see, typically go on during this week. Yesterday, previously this whole week, there hasn't been like really exciting action. We got a real big drop today, which really felt like that first time we had some OPEX action. So tomorrow is actual options expiration. Let's see what happens. Let's look to see what we got on the calendar. On the calendar for tomorrow, jobless claims came out today. Tomorrow, it's all flash services PMI, manufacturing and services PMI tomorrow. That comes in right 15 minutes after market open. So likely any lottos to be taken, guys, probably just want to wait for that data to get over with. There's usually some sort of wick up, wick down, an initial fake out move. So just be ready for that. Now, as far as the charts are concerned, I think it's pretty straightforward. As we can see here, this buy the dip, fashion is turning into a more sideways consolidated action, right? So I think on the docket for tomorrow, look, we closed right at about that 412 area, which we know from this morning's action, if we just zoom down to like a 1 hour chart here, right? Get down to the 1 hour chart here. We held that major, right? Went right up to the pre-market high or the overnight high here, rejected, okay, but then came right back up and closed at that huge level. So what does that mean for overnight? Well, if we closed right at the once was demand is now likely to be supply. Does that mean we head down? Does it mean we head up? I have no idea. Just have to see what the pajama traders do for us tomorrow. But I think it's pretty easy to spot here. As long as we stay up below this 412, you're going to want to target today's low, which is 410.27. Call it 410 even. Above 412, take us up to the high up here. Call it 414 just to make it easy. And I think anything above there was going to take us right back to that previous week high and that reject spot from yesterday. Okay, being 415. Now, if we want to get froggy, break and hold over 415, we can rip this thing up to 416, 418 above that. But it looks like this trend of buy the dip is coming into a consolidated distribution phase now. Like if we just go like this and see, we went by the dip, we had higher high, higher high, higher high, lower high, I'm sorry, higher low, higher low, higher low. Now we've had lower high, lower low, lower low. Does the fashion continue tomorrow? If it does, you're going to want to watch like a midpoint 408 level underneath this 410, but I think ultimately the bottom of this old balance zone could be that 406, the previous week low. If the OPEX gods want to absolutely fuck everybody up, they could easily take us down there. This 4-hour chart is ready to fire on the TTM. We have the momentum downside. Do we continue down? Maybe look for that break of 410, target 408, 406. Anything above or below 412, use that as your pivot to take you to 414, 415, 416 above. Guys, wake up early, get your levels right, and of course, don't do anything fucking stupid. We'll see you bright and early. Peace.